companies are small, they can pick them up and they can dominate the new micro-insurance market you're building?
Well, insurance operations is always based on either the size of the risk you insure or the number of the products you sell. And all operators of insurance have come to admit that Nigerian population is underserviced. And international insurance markets, especially in the Western countries, have been developed around the retail businesses, the insurance of the individuals, which we have a huge population in Nigeria, but are not benefiting from the size of the population. So that gave them the interest. But curiously, their coming in has given us the impression is that confidence is coming back on the Nigerian economy. Because if such players are willing to come and invest in the industry, then it's a good omen to the economy. We as regulators welcome such movement into the economy because they will bring in developed practice, develop products, and develop way of doing things to improve what we do here. What we did as a regulator some time ago is to decide on the policy that we would suspend the issuance of new licenses. Otherwise, they will come and take up new licenses, and our companies will die. So we encourage and only allow them to come in as partners to existing players or partners to other Nigerians, so that Nigerians also as shareholders can have the benefit of such investment. And what they have done so far, I would say, has been positive, because they have come in with huge capital, they have come in with good products, and they have come in with a discipline that is beyond the level we have in Nigeria. So it makes regulation for us much, much easier. We see their involvement in the sector in a lot of positive lights, because they are reaching out to areas and to populations that were hitherto ignored and abandoned. And that has been a wake-up call to the local players, because now they are seeing that they have a challenge beyond what they use to understand as challenges. And it's a plus and win-win for all of us.
Very interesting. The minimum regulatory requirement for microinsurance was 150. You slashed that down to 40 million naira. That's huge.
The 150 was for a national license.
Yes.
The 40 million for one unit license. We up the national license to 600 million.
Yes. Yeah. 600.
4 times.
That's a lot of money.
To be. If you operate, you have to. If you remember, in insurance business, non-life license is 3 billion minimum, and life is 2 billion. But we are around micro to 600 million because we believe national licenses are going to be owned by national insurance players who already have met the minimum conventional licensing. And for players that want to come in newly, who must start at the unit level, can start at 40 million. So it is, I think, an increase generally. If you up the requirements, the multiple of licenses you need in unit level before you can get national, you get to that around 600 million, which is 4 times what it used to be before.
Will the registration and the statutory deposit be a very difficult one for the operators to meet?
No, it will not be. We have not changed the insurance law, the National Insurance Act of 2003 and the National Insurance Commission Act of 1997. So we cannot operate outside the law. Whatever the law provides for the operation of an insurance company, to an extent, will apply to any company licensed as an insurance company. Only that we can provide some incentive to encourage that class to develop. I will give you an example. We require absolute payment of premium before a cover is set. Otherwise, there is no policy. By the no premium, no cover. But to encourage micro players to develop and to encourage micro insurance clientele, we allow installment payment of premium. Because there are micro clients that make earning on a daily basis. Take a vulcanizer, for example. You can't expect him to pay, say, for example, you're charging 100 naira annual premium. He may not be able to afford 100 naira at a go. So we can allow installment premiums for micro insurance operation. Sometimes it comes as low as monthly payments, which you cannot get in the conventional business. So these are incentives. And we allow also low level of statistics. In an conventional insurance company, you will find an insurance company with a head office located in Victoria Island. You'll find an insurance company, an average insurance company located in Lagos Island. Or you'll find them located in Maitama in Abuja. A micro insurance license is likely going to be located in a market. So we don't expect them to have management that wears Gucci suits. We don't expect them to ride big black 4x4 vehicles. The client will not have confidence in them. We expect them to operate at the level.
So the new micro insurance, for example.
Yes.
In Balogun Market in Lagos, for example, would have to have their office down there.
They would have their office.
And have officers who wear less Gucci shoes, but who looks like the traders or the artisans they want to collect money from?
It will help them in their marketing. A micro client will not trust somebody in a big black 4x4.
Yeah, he thinks this guy's coming to rob me off.
Exactly. But
the guy has some money already. So why is he coming? Why is he coming to me?
Exactly.
That's the thinking.
And you see, the difference, the benefit of dealing with a micro insurance company is you don't have the bureaucracy of the governance structure that requires approval to come from the group level, the regional level, or anything. The man in the location is the man who takes an approval. Because, for example, we have limits of 48 hours of settlement of claims. Claims will be settled within 48 hours.
So the market women, those folks whose markets get burnt down sometimes or affected by flood, can get their claims as quickly as possible.
As quickly as possible, because very likely, if the market goes burned 100%, very likely some part of the microinsurance office will be burnt. So he will know there was a loss.
Okay. Okay. So in terms of payment, and I like this people's insurance. Maybe we just call it people's microinsurance.
It is actually people's insurance, but using people as part of a name gives it a kind of.
No, I'm just throwing something out, just in case I'm interested in setting up one.
It is a people's.
I could just call it people's microinsurance. But again, that means that the insurance practitioners go to the market women, the artisans on a daily basis, like the Baba Alajo and the rest, the Isusu guys, right? And they say, like, well, this is your, you need to pay 50 naira, 100 naira this month, and this is it, you need to pay now.
That is if they want to deal with the individual micro client.
Yeah.
In most cases, micro insurance is sold to groups. For example, a market association, where every member of the market is a member of the association.
Like the Yam Sellers Association?
Exactly.
So
the association can take care of all their members by having a group policy. And if the company, if the office is located in or close to the market, it'll be easier for them to just walk into the market. They could even walk in every morning and say, "Hi, good morning," and pass. Because they know their protector is living with them. It's unlike a situation where they have to either drive a long way to go to see a branch manager, or we try to encourage the on-the-ground operations.
I love that. This is called the bottom of the pyramid insurance. But again, we want to look at your sector. And finally, the final part of the program about the insurance sector within the Nigeria's broader economy. Mohammed Kari, the NAICOM, the Commissioner for Insurance, is alive here for the final 4 minutes of the program.